Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today, during the Asian Session Live Market Analysis and the Forecast webinar, I'm going to review the forecast, what I have given it on 20th of February on Monday. So Monday, I gave the forecast for this entire week, 20th to 24th of February. Today, we are on 24th of February. So we will try to review what has happened to the market, whether it is moved in line with that of the expectations or against, so that we'll be able to understand the reliability of the forecast. So basically, in order to have an effective trading system, we need to have the forecast model. So this forecast model is based on a specific statistical algorithm. Besides, we should also try to understand from time to time the market can change its perception or the sentiment, and that we should be in a position to read and then plan our trade, or we have to decide how exactly we have to handle the open position. Then in the event if the market goes against, we need a trading strategy so that we'll be able to earn money from that other market. So that if we consider the derived forecast, market reading, and that of the trading strategy, we should be making less risk and more reward trading in the market. So when you incur less risk, automatically you find that equity is not eroding much. Instead, we'll be building the equity. So building the equity is the utmost important task of any trader. Everybody wanted to enter into the market, not just because they have any affinity towards any currency. They are only entering into trading arena mainly to make profit so that they can improve their lifestyle, their living comfort. So in the process, we should not lose our shirt. Now coming to that of the forecast. So as I explained that they started making the slide on Monday, and then as a week beginning, false moon started gaining. Then again, they made their drop on Wednesday and also Thursday. Then subsequently, you found that they started gaining the levels in the case of Euro and GBP. Mostly they handled the crosses, especially the European crosses. Because of that, they made more drop in the case of Euro and less drop in the case of GBP. And that way they started dropping the level in the case of Euro GBP cross. By gaining more level in the case of GBP and dropping Euro, they'll be able to gain more level in the case of Euro GBP cross. And that is what they have been doing all along. And so today they are expected to make the swing and slide during the Japanese session, a small dip. And then they are expected to make a rise during the European session. And during the US session, they are expected to make either way stop and move. Below that of the low and above that of the high, they are expected to make the stop ends. So that is what is envisaged. Next week being the month end and the new month beginning time, in 5 trading days from 27th of February to 3rd of March, they are expected to make very volatile moves in the market and also gain very aggressively the levels in the case of numerator as well as denominator currencies. So keep in mind they create the market sentiment and act against that of the traders. So they just created the bearish feel and started gaining the levels in the case of Euro and GBP. And today they will try to pretend as if it is going to drop, and they will handle the yen crosses by keeping yen at a lower level and also dropping Euro and GBP to start with, and then start gaining the levels in all the 3 currencies. So that way they are expected to handle the various crosses during this particular week before coming to the other majors from next week. So always they keep in mind wherever the volume is there, they will try to handle those currencies because they wanted to earn money only when the traders have committed positions. So when the traders find a lot of uncertainty in the market and committed positions in the case of crosses, they focused on crosses so that they will handle the crosses against the expectations of the traders and then try to earn money. Coming to that of the levels which they are expected to make the swings in this week, they came down to that of 1.05 and slightly lower, started gaining the level, went up to 1.0633, and they just made about 100 pips swing, did not make much of a gain. And in the case of GBP, they came down to 1.2402. The expected low was 1.252425, and then they are expected to gain level. But again, here you find about 150 pips gain. They have done it, and today they are likely to gain more level after a brief downward stop point. Then in the case of yen, they came down to 112.56 and holding around that of 112.8081, below that of 130, and then they are expected to gain the levels during the course of the day, along with that of euro and GBP. Then in the case of CHU, again they just made about 100 pips swing, and they formed the low as 1.0012, the high as 1.0141, started dropping again. Then in the case of Canadian dollar, 1.3075, they showed it as a low, and the high was 1.3210 briefly, and then they quickly dropped after making upward stop, and they started dropping it about 100 pips to 1.31 area, and they are likely to come down. Then in the case of Australian dollar, they came down to 0.7650 and started gaining the level to 7741, and they are likely to breach and go above during the day. So in all, you find that they drop and gain, drop and gain. So what it envisages or what it implies to us. So basically the players create the bearish feel in all the currencies and then subsequently gain the levels. Thereby, the traders who have committed sell positions get trapped and they go in for short covering. So this is what the players are trying to do every time by creating the US dollar sentiment in the market. And this is the way they try to accumulate the position, gain the levels and book profit, and then after the drop accumulate the position, so that when they do about 100-150 pips swing in the market, then automatically they are building the profit before committing the high level buy and start gaining the levels in the market. Then what happens? Then when they do the high level buy, because of the profit earned during that of the churning, their buy level will be still lower than that of the market on an average. Thereby, in the event of any distress, liquidation happens in the market, they will be the first one to do that and they will be unhurt. This is what they plan and do it in the market. So we need to understand that they are positioning themselves, trying to accumulate position, book profit, trying to accumulate position, so that their average buy level comes below that of the market. Then they make high level buys and then start gaining the levels. But still, even though they make high level buys, their average will be much lower than that of the market, because at the lower level they have accumulated more position. Higher level they buy lesser positions, so that weighted average will be still less in all their holdings. Now we'll come to that of the market reading. They set the low as 1.0570 in the case of euro, and 1.0587 is the high. They are not breached the low or the high. In the case of GBP, 1.2536 is the low, and the high is 1.2559. They are not breached the low or the high. Then yen, 112.61 is the low, 112.95 is the high. They are not breached the low or the high. Then CHF, 1.0060 is the low, 1.0075 is the high. They are not breached the low or the high. In Canadian dollar, 1.3097 is the low. They just breached the low by 3 pips, came down to 1.3094. The high is 1.30 3118, they are not breached it. So here you find that both USD CAD and Australian dollar showing negative net change. That means they wanted to handle the crosses, commodity crosses to start with for the weekend, and then subsequently they will handle all of the crosses. Then in the case of Australian dollar, 76.99 is the low and 77.20 is the high. They are not breached the low or the high. So excepting Canadian dollar, nowhere you come across they have breached the low or the high, indicating that the market volume is really subdued and they are expecting the traders to commit more positions during the weekend, and then they are expected to make some whips or moves in the market. The recommended trades for today, you can try to take a buy around 1.0572, just 2 pips above that of the low, and wait for them to gain the level and keep the hedge order to limit the risk. And once the position makes profit during that of the European session, we can try to close it. US session, they are expected to make a drop. At that time, we can do a sell and buy trade also, or wait for that drop to happen, then try to take a buy. Then towards close of the US session, they are expected to gain the level again. Then you can book profit. So either way stop-ons they could do during the day. So near the low, you try to take a buy. Near the high, you try to take a sell. When they are not breached the low or the high for more than 30 minutes during the start of the session. In the case of GBP, near that of the low, 1.2535, you can take a buy and wait for the rise. Keep the hedge order to limit the risk. Similarly, in the case of yen, they are expected to make a brief downward stop and then gain. So 112.50, you can keep the buy order, and 113.20, you can keep the book profit order. 112.20, you can keep the hedge order to limit the risk. So these are all the recommended trades which you can try it in a demo trading platform and see whether it's working for you. Then later on, you can try to follow and take positions in the live trading account. So these are all the market timings. So this is very vital for you to understand. If you understand the market timings well, then you will not incur any difficulty in the market to understand when they are going to make a false move, when they are going to make the stop and also extended move and the intentional move. Then follow the timings. Then you'll find exactly on the dot of the time they will change the market sentiment and also make a different type of move. So don't think that the sentiment is long-lived, and they are actually short-lived, and they try to change the market sentiment from time to time during the 24 hours day. Because of that, the traders develop the market surprise because they think that US dollar is going to gain. Then suddenly you find that after committing the positions, the market moves against the expectations of the traders and show the US dollar weakening move. Then when the traders think that, okay, the market is going to show the US dollar weakening move, we'll try to take a buy and sell. Then the players drop the market and use them to liquidate the long positions. This is what they do, and that is because of that, about 100 to 150 pips net change level, every week they are making the churning move. Gain the level, drop, gain the level, drop, gain the level, drop. And each time they try to show a slightly lower low, then immediately the traders develop the bearish sentiment. So I have done the review of the forecast and also explained to you what they are expected to make in the market. And I'll come back on Monday and give you the forecast for the next week. That is going to be very vital because it is the trend reversal week, monthly trend reversal week. So if you've got any doubt, you can ask me in the question answer window. I'll be willing to answer those questions. I just displayed the forecast sheet. So those of you join late probably can find out how exactly they are expected to make the moves in the market. Any question you can ask me in the question and answer window. Next week they are going to be very aggressive, and they are expected to make extended downward stop and then start gaining aggressively. Be careful during the trend reversal time, monthly trend reversal time. They will make extended stop and move in any one pair. Most likely in the case of GBP or USDN. So keep that in mind and then trade accordingly. If you use the hedge order to limit the risk, at the time you can book easily profit during the extended stop and then continue to book profit in the original buy positions. If there is any question, you can ask me. So these are all the levels in which they just made the swings in the market. And also I have shown the market reading, the initial lows and the highs, what they are set around 3:30 GMT. And we are trying to understand from there which way they are expected to make the moves in the market from time to time. So that way we'll be able to eliminate the uncertainty about the market. So once you get more clarity about the market move, then we are able to take appropriate trading decisions. These are all the recommended calls. Near the low, you can try to take a buy, wait for the early or the late sessions, and then try to take positions. And during that of the mid sessions, they will handle the crosses. So if you're interested in trading in crosses, you can just take the positions during mid sessions. Otherwise, wait for the early session to take position and book profit during that of the late session as a session-wise trade, or take position during the early part of the Japanese session and book profit during that of the US session as the intraday trade. So no question is coming forward, so I'll try to wind up the webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I will come back on Monday, 27th of February, to explain the expected market moves for the next week, which is going to be the month end of the new month beginning time. The market is known to make very volatile moves. So understand the volatility, understand the intentions of the players, reduce the uncertainty so that you will be able to trade wisely, and at any cost, don't do the trade of buy high and sell low. And there only the traders get trapped. Whenever there is a quick drop, once they stop cutting the new low for more than 30 minutes to 2 hours, you try to take a buy, 100% will be able to book profit in such trades. So wish you all the best in your trades. See you on Monday.